Thank you very much for being here, of course, and it's a pleasure and honor for me to be here today. And what we're going to talk in the next 15 minutes, the story of smart order routing, and hopefully it will be enjoyable and entertaining. So before we sort of go, currently I'm also running EPAM Product Innovation Center, and we'll have a short presentation. So if you've got any questions, you can find me there, and I will be happy to show you all the tools, all the technology which was used in this presentation. I guess next slide, please, because I have no clicker. Right. So basically, the idea is simple. Everybody heard or not about smart order routing. What exactly it means? You've got order, and because liquidity is very fragmented, then this idea, why don't we break the order on multiple pieces and grab all the best executions from all available venues and combine it together? And that's a basic standard smart order routing algorithm. And everybody implements it, everybody uses it. And in my prior life in Deltics, we were building technology for quantitative research and quantitative trading. And it's very natural for us would be to study how this smart order router compares to other execution styles. What if it's not the best one? What if it's not even a good one? Nobody knows. So we decided to do a very simple study, took a lot of historical data and simulated execution of smart order routing algorithm and compared with executions on 4 different venues, traditional exchanges, Coinbase, on Gemini, Kraken, and Bitstamp. And we decided to use as the benchmark, of course, smart order router and compare it against the what's called iceberg style market pegging order. What's the idea of this iceberg style? We're going to see it in a few minutes in the picture, but it's very simple. You take order and you break it into very small clips, and the size of a clip is the 30-minute average of a best bid or best offer on a particular venue, and you place a limit order, 1 tick above or below best bid offer. And if order is not filled within a certain very small period of time, you make it move it up and down until the whole order is clipped. Clearly, SOAR has advantage. It's fast because you just send it, you get it back. It's like a market order with a bunch of venues. Of course, there's a cost associated with maintaining all this environment, but presumably it's good. And this order which we're using, there's a peg order, clearly is not as fast because you're going to smallly put limit orders. So there's a risk associated with that. That's exactly what we're going to do. We're going to look at a bunch of orders. For every minute, we're going to send SOAR simulated and this peg order on 4 different venues, different sizes. So we're going to have a lot of data to compare. So next slide, please. Right, so what are we going to be measuring, right? I mean, basically, without spending too much time and boring you, we measure efficiency expressed in total execution slippage, which is difference between arrival price and what we field order at. And we're adding commissions to it and expressing everything in basis points. So in addition, we're going to measure time, which is required to field the order. And we'll also do volatility of execution costs. So basically, 2 things. How well we execute and what's the risk associated with that. Because if we're waiting for a certain period of time, of course, market goes up and down, and we're filling orders, positive, negative slippages. We'll see in a few minutes what exactly is going to happen. So next slide, please. So we use the tools, like I said, in Deltics, we wrote a lot of software. It's a software company, and we aggregated terabytes of historical data for all different exchanges. This represents the market data for 3 seconds from Coinbase. This is just 3 seconds of market. All these dots, green and red, I guess. It's a kind of a Milky Way. It's at different levels, and it's a standard representation of order book. If you haven't seen these pictures, that's how they look. And it's like only 50 levels deep. We have actually collected to thousands of levels of depth. And that's one of the prerequisites for this research, market data in its entire microstructure, even though for this particular algo, we're using only best bid offer. And also we're using QuantOffice, our main product, for sort of simulating and executing quantitative strategies. So I guess we're going to go to the next slide. Excuse me, I need next slide. Right, this represents the consolidated order book. Right, what you see on the left is basically ladder, and unfortunately it's hard to read, but in the middle is a spread. right at the bottom, there's what's called holy grail, right, of the market makers. It's arbitrage between different venues. So you can see that Coinbase and Kraken at the moment have little overlap. Many years ago, right, in 2017, that was the source of income for all cryptocurrency traders. They would buy on Coinbase, sell on Gemini, or vice versa, and they would make $500 per trade. Now, of course, market makers and markets are more efficient, and pretty much all this arbitrage gone. However, there's different ways to look at it. This is typical order book. You can basically use our tools. You can step through every second or every moment of the market, look at this order book. That's the visual illustration of what's going to happen next. I guess we need next slide. Right, that's a cool one. So what I'm showing here is a sequence of these executions, which is, as you remember, right? I said smarter router, what it was going to do, take the chunk of Bitcoins, break it into exchanges based upon liquidity, fill them, and that's easy. This is a peg order, and you can see we're placing, in this particular case, we're buying. So we're basically placing one tick above ask. And basically, you can see that when order is filled, we're happy and we're placing next clip. If order is not filled because market moves away from us, the crosses represent places where we don't fill orders, then we will be placing next order one tick above it. And the duration of the limit order, replacing limit order, good till canceled, would be very exchange specific. Basically, every exchange has rate limits, right? You know that you can't place as many orders on crypto exchanges as you want. They'll ban you. And in most exchanges, it's 300 orders per minute. So basically, durations here will be around 200 milliseconds. So that's pretty much what is you can see here is the life of one kind of a peg order. And the top corner, we're talking about commissions. Very important that there's a taker commissions and the maker commissions, right? Because they are different. If you're providing liquidity to exchange, the exchange rewards you and they lower commissions. If you're taking liquidity, like market orders will take liquidity and they would be punishing you kind of for this. Limit orders will sort of kind of provide liquidity to exchanges. They try to reward you. One exchange, Bitstamp, has no difference and it's quite high commissions. And you will see in a few minutes what exactly it results in. But basically, that's the idea, right? You're placing this kind of orders. We can see this bunch of them and fill them and compare with SOAR. And next slide would kind of have a first glimpse into what happens. I don't want you, of course, to read this, but it just basically explains on the table that we're sending every minute, we're sending different order sizes, like 0.2 Bitcoins, 0.4, 0.8, 1, 2, until 10, from 0.2 small orders to 10 Bitcoins large orders. Every minute we're simulating them. Every minute we're looking at what happens if you buy and sell. So we don't really, we decided to exclude market trends. And we aggregated, as you can see at the bottom, around 200,000 data points. To run them on the different cloud boxes. And next slide would be the pinnacle of the whole story, because it will tell us interesting and reveal interesting observations. Let's just talk about this. We're going to spend a few minutes in the slides. So what you actually see here? It's a grid, right? On the bottom, it's a basis points for averaging total cost of execution, which includes slippages and commissions. And yellow line represents the SOAR, which is kind of intuitive. The size of order is 0.2 on the left to 10 Bitcoins on the right. And the total execution cost mean sort of grows, but standard deviation doesn't, because SOAR is definitely executed very fast. So everything happens instantaneously, and there's no variability. While limit orders, peg orders, clearly you can see that the larger is order size, the greater is volatility, which basically presents certain risk. However, the cool thing about what we see here, there's different curves, right? Red one for Coinbase, and the magenta one for Kraken, and the right blue one is for Bitstamp. So because of these commissions, we can immediately say that Bitstamp completely falls outside of our interest. Any execution on Bitstamp, in this particular case, would be worse than SOAR. However, if you're executing 2 Bitcoins or 3 Bitcoins, then you can see that on Coinbase or Kraken, the situation is not as trivial. You're getting lower total execution cost. of course you get volatility. So this is interesting point. So if you entity which trades a lot, and you've got a lot of orders and a lot of execution opportunities, then you might think about whether it's prudent or not to use SOAR. If you are just trade not so frequently, then of course volatility may give you unpleasant results. So SOAR is probably a good option for you. So we're going to next slide. Right, this basically illustrates the idea about average execution time. So right where we have 0, 0, big kind of a dot, that's what happened with SOAR. Yes, basically like expected, it's fast, it's almost instantaneous, and as a result, there's not so much volatility. However, the clearly bad exchange, so we can see Coinbase in this particular case, or Kraken, they are providing less volatility and lower execution basically times, and the size of the dot represents the size of the order. So again, that illustrates the idea that there's something to think about when we're designing proper best execution algorithms. I guess I need next slide. Right, that slide actually explains why Bitstamp is not so good. Basically, as you can see, we've got 4 different best bid offer spreads on every exchange. And I am not trying to say anything more than what I'm saying, but there's obviously other reasons to trade Bitstamp than just simply look at best execution. But from kind of quantitative research perspective, that's just illustration of different spreads, which we're measuring every kind of a tick order on the market. Again, this is only a few seconds of a market time. And I mean, whatever. And you can see that typically Bitstamp is much higher spreads than on Coinbase, Kraken, and Gemini. And that's pretty much also kind of explains why we could rule out the results on Bitstamp for this experiment. And if we go to the next slide, that's kind of an illustration of the same idea. That kind of what happens depending on order size. In the bottom, the size of order from 0 to Bitcoins to 10. And on the vertical, we're basically measuring average total cost in basis points. And we can see almost visually, and I'm going to be presenting in the next slide, this diagram that I excluded Bitstamp, and I showed you 2 kind of lines. So the magenta line represents the SOAR, and the yellow horizontal line represents the kind of average execution cost on 3 exchanges, which is Gemini, Coinbase, and Kraken. So what we see that around 2 and 3 Bitcoins, we are kind of putting efficiency of SOAR to kind of a close investigation. So the idea of the whole story is to say that if you trade less than 1 Bitcoin or less than 2 Bitcoins, then definitely don't even bother. Use SOAR in this case, and it gives you low volatility and gives you sort of decent results. However, if you trade more than 2 Bitcoins and trade more frequently than, say, a couple of times a day, then there's a room for improvement. I'm not suggesting to use, for example, this specific iceberg type of order, but there's definitely a place to kind of optimize. And my last slide would be representing the kind of conclusion to the whole story, which basically says exactly what I said, that SOAR is not panacea. It's not the sort of one-size-fits-all kind of execution algo. And that kind of concludes my sort of story. I'm done.
And that's a great story.
It's a good story. It's actually a good story. So thank you for your time. Any questions, you know where to find me. I'm more than happy to provide you more information and everything if you want to see live right there. Thanks a lot.
Thanks, Ilya.